Thank you all for joining the session today. As Amy mentioned, the topic of our discussion is David and Goliath, a collaborative approach to supporting SMEs. SMEs are the engine of the US economy, and regional banks provide key trade services to SMEs, while global banks provide international reach to regional banks in that support. This panel discussion will explore how the global trade community can collaborate to best support local businesses and promote economic growth. My name is Mustafa Tirmizi, and I'm a director within Standard Chartered's Transaction Banking Group covering FIs. Amy,
Yes.
Maybe a little bit about yourself.
Thanks, Mustafa. Amy Sahm from Fulton Bank. I head up international services there, and we are a $33 billion bank located in the Mideast. And we're really focused on supporting our SME clients in FX payments and trade throughout our 5-state footprint. And Rob?
My name is Robb Morrison. I'm the CFO for BRPH Companies, Inc., located in Melbourne, Florida. Started my career as a CPA in the 1990s. The last 23 years, I've been controller, CFO for private companies, most recently BRPH Companies. We're an architect engineering firm and also perform construction. $188 million a year, about 50-50 construction and design work. And we're 90% US domestic work and 10% international.
And last but not the least, Tony Ceballos. Tony, over to you.
Good morning, everyone, and thank you, Mustafa. I'm Tony Ceballos, and I'm the director for the U.S. Commercial Service Office in Philadelphia. The Commercial Service is under the International Trade Administration, which is under the U.S. Department of Commerce, so the federal government. And our mandate is helping companies to increase their export sales, primarily small and medium-sized businesses. And my footprint is the eastern third of Pennsylvania and all of Delaware. And how we work is we help companies to expand internationally through our overseas offices, embassies, and consulates worldwide by helping them to identify their target markets, understand what the regulations are, identify buyers, and connect them with those buyers through our overseas posts, and as well as trade events. So we have a number of services that are all designed to help companies expand their exports worldwide.
Thank you, Tony. So can we have the poll question? So we have a poll question to start off with. So this is an interesting one. How many FDIC-insured commercial banks are there in the United States of America? C is the right one. I see no one really voted for 1 gazillion. Yeah. Maybe have the other poll question. What is the estimated percentage of unbanked households in the US? So the correct answer to that one is 4.5%. So those are some interesting factoids to kind of kick off our session. Can we have the slide? So David and Goliath, the collaborative approach to supporting SMEs. So within our ecosystem here, we have global banks, regional banks, as well as the client, and we have the commercial services and the government. One of the key things, and if you can go on to the next slide, please. So we picked, I think one of the first topical things was Jerry Maguire's Help Me, Help You. And that's pretty topical because regional banks, as you know, last year's March Madness came across was not just limited to basketball. It had to do with banks as well. Amy, and what, in your opinion, what are the main pain points for regional banks as they try to support their clients to go global?
Sure. And yeah, so there are a number of challenges trying to run trade services as a smaller regional bank, although I will say it's also very rewarding to have the ability to really grow and develop an organization that can support small companies, really grow their business through whether it's export or finding new supply chains. But some of the challenges are that we don't have foreign locations, right? We don't have this internal network. So when there's a problem with the transaction, it's not like, oh, let's just call our Singapore and have them fix that, or let's call our London. Or in our case, there's not even a let's call New York, because there is none, right? So it really forces us to become much more resourceful. And so we work very hard at building valuable partnerships with our correspondent banks. And that can be challenging in and of itself. As a smaller bank, we sometimes don't have sufficient volumes to support those relationships. So it can become quite a balancing act to maintain the correct infrastructure. And we try to mitigate against that by really building key, deeper relationships, by really developing our internal teams so that we can provide expertise to our client base and really remain relevant in that market.
No, that's fascinating. And, as a global bank, we definitely see that value in being your extension to the world. How do you think regional banks differ from global banks when they're approaching clientele? Do you think there is a distinction in that approach?
I do. So number one is just size, right? We're the banks that are going to be supporting the smaller companies and the medium-sized companies who are expanding into trade. Sometimes we have very small clients who need a lot of education. They need hand-holding. That's the type of attention typically not going to get from a global bank just because of the scale of it. So we have the ability to be active in our communities with our resource partners like U.S. Commercial Service, some of the state agencies, et cetera. We partner with them to try to highlight export and the resources that are really available to companies, and then we can provide that very intense hand-holding service. So we're always selling on service. We're not selling on our reach. We facilitate our reach through global markets through our correspondents, but when we sell to our own client base, we're focusing on the service level and the expertise that we can provide them.
2023 was an interesting year for regional banks, for lack of a better way of positioning it. But what do you think some of the challenges that regional banks face in times of stress, in your opinion?
Yeah, so last March obviously was difficult for a lot of us. We saw some lines being pulled. We saw a lot of questions coming, not only from our correspondents, but also from the client base. Are you secure? Are my deposits secure with you? So it took a lot of reassurance. It took a lot of very strong messaging from our corporate communications group to really sort of calm the concern in the market. But I think ultimately we got through it and our partners hung in with us, and we came out on the other side okay. But it rattled the decks a little bit.
No, and chiming in, just giving an international bank or a global bank's perspective, as front office people who are front and center with the regional banks, we obviously have our risk folks coming in and trying to obviously get as much information in these times of stress. I think one of the challenges as relationship managers or sales people we face is to reassure them that there is risk in the system. We can never escape that, but essentially not to paint the entire sector with one broad brush and to actually isolate and understand where the actual risk lies. So that's some of the internal conversations that we are having with our partners in risk to ensure that we keep our firms safe as well as do right by our regional bank clients and support them as well as best as we can. And and this is a question for both of you. What value do you think regional banks bring to SME clients? And maybe Amy and then Rob, you can give your insight as well.
Okay. So again, for us, I think it's the educational piece. It's the very high touch service, the ability to show them that we can do whatever is needed, whether it's, and my team does everything, foreign exchange, payments, and trade transactions. So they're coming to us sort of as a one-stop shop. They have a point of contact. They know our names. They know how to reach us. It's not an 800 number. And I think that's what we see in terms of appreciation from the client base, that, oh, you can do everything I need you to do, and you're also really there for us, and you're supportive, and you provide that extra touch that we're looking for. And so we end up with a lot of very dedicated clients who will sometimes even call our small foreign exchange trading desk just to talk about what happened on the weekend, because they've built that relationship, and they want to communicate with them. They want to keep building that bond. So I think that's where our value is to our clients.
I agree. I mean, it's the personal touch. I mean, I'll tell a little anecdote. When I first started at BRPH, the CEO had a relationship with a global bank person. He put me in touch with them, wanted us to change our treasury to it. I did. They met all our needs. They had great technology. Everything was perfect. But subsequent to that, our CEO decided to retire. Being an employee-owned firm, I needed to fund that. I needed to come up with, okay, where am I going to get the capital? How am I going to buy out my CEO? I called on the global bank. I ended up talking to my local relationship person. That's great. He was going to take care of it. But really, that turned into a few weeks of phone calls with people in New York, phone calls with people out of state that didn't understand our business. As the year came to an end, I got a phone call from my local relationship saying they were not going to be able to underwrite that loan for us. So that kind of put me in a bind. I immediately went back to my regional bank that I still had a relationship with, worked through that. So long story short, they understood our business. They were doing it. And the moral of the story is, with the regional banks, what we need, the service size that we need, the decisions can be made by the people we know and that understand our business. They work with us to make sure our business is strong, and they're there when we need us. With the global bank, I didn't get that. There were people that didn't know me and couldn't get to the bottom line for us.
And what's interesting in both your comments is it's the personal connection and the human touch, which interestingly, in a world that's increasingly focused on AI and technology and sort of taking the human experience or reducing it or bringing in more efficiencies, the human experience is increasingly a luxury. And I think even within the international and global banking space, when we as global banks advocate for our regional banking partners in our numerous locations, a lot of times it comes down to building that personal connection with that lady or gentleman in Singapore or India or Bangladesh to help facilitate a transaction or a service that is at that moment very important for a client. So it's interesting how the human experience is quite important and common across this thread. Just bringing Tony, you into the conversation, and Amy as well. How do you think the Department of Commerce or the U.S. Commercial Services work with regional banks in cohesion in supporting the SME client base in the U.S.?
Well,
uh-oh.
Are we having some technical difficulties?
Can be actions utilizing SBA and Exim Bank tools. So the local banks will provide some of the expertise on working directly with companies, and Exim Bank and SBA will talk about their policies. But the whole goal is to increase confidence in the small and medium-sized companies that there is a way to mitigate risk, to make international sales safer. There's multiple policies that exist. And so we'll collaborate on many different programs, workshops and big events. But we'll also work with banks on a case-by-case basis. So companies will come to us with problems that either their buyer is requesting 90, 180-day payment. They're not sure what to do. They're not familiar with back-to-back letter of credit. I mean, there's questions that come about that are in the financial area that are beyond our expertise. Luckily, we know banks that have that expertise, that international expertise, that are local, and we provide them with a list of banks, and also banks will swim in the same circles that we do when it comes to trade promotion, trade event, participation, and so banks generally go where we are to get exposure to companies and exporters that are interested in international trade. So we try to create an ecosystem of service providers of all stripes, finance, legal, freight forwarding, and export expansion to give companies options and partners to work with to ensure that they know that they have a whole team behind them to help them to be successful internationally.
So Amy, how's your experience been with working closely with commercial services?
Yeah, it's been a great resource for us. So Tony is actually one of my local partners in the Mid-Atlantic region, and I participate on the District Export Council out of Greater Philadelphia with him. And so we're able to really reach a lot of smaller companies that need some educational support that are growing their export business in partnership with U.S. Commercial Service. Sometimes there are state agencies as well. Some of us might be involved with local World Trade Centers, et cetera. So it's another resource that we can bring to our customers, and we can help to kind of close the loop on any gaps they may have in building an export program and really growing their sales internationally. So we really appreciate having resources like U.S. Commercial Service available to us to help extend that to our client base.
So it's truly an example of partnership between the government and regional banks to support a
Yes.
very valuable part of the economy.
Absolutely.
Yeah. Could we have the poll question? So it is A, 43%. That is the response. Can we have another poll question, please? Which U.S. state has the largest number of SMEs? So the correct response is California.
California. Sorry, Rob.
I was a little surprised by this one, but so moving on to our second topic. Playing for the home team. As you can see, 43% or significant portion of the US economy is supported by SMEs, and it's a sector that's often not given its due. I feel the larger companies, the Fortune 500, get a lot of space in the media out there, but this is a critical sector of the US economy. So playing for the home team is how is the US commercial services helping SMEs to remain competitive? Tony, how do you connect exporting companies in your region to local banks? Should they need banking services?
So all of the export assistance centers, sometimes they're called USEX, U.S. Export Assistance Centers. They all maintain a list of banks that are local, that they trust and have international expertise. We're delegated authority lenders. And when companies will come to us with the questions that I mentioned before, where they're not sure about getting paid, their buyer wants 60, 90, 180 days, or they're hearing terms that they're not familiar with, like a back-to-back letter of credit, we then provide them with a list of those banks, and they will go in and reach out to those particular banks. We have to be impartial. We can't direct them and make a warm connection to an introduction to one particular bank. We always have to provide at least three. Also, we do a lot of trade seminars, workshops, and programs together where we have our banks that are our partners. They will attend, and at that point they are in communication and in connection with our clients and with companies that are interested in exporting. So they intermingle there, and they're able to have relationships with banks, and then whenever they need them, they can call upon them. So as I mentioned before, there's an ecosystem that we maintain and create within all of our trade communities, and it always includes banks, local banks that are in connection with our SMEs.
So, and just building on your experiences, because you've worked together, have you had situations, and this is actually one of the questions that's come in as well, where an SME that does not have wants to secure credit facilities but is having trouble doing so? How do you collaborate together to kind of see if you can help that client?
So there are cases where we might get a referral, whether it's from Tony at the U.S. Commercial Service or a state resource, and we can help connect them. We do several SBA, export working capital lines, so clients who might be challenged to get that credit approval alone on a standalone basis, we can work through the SBA program. So we've done that a number of times as well. So we try to leverage whatever resources we see in the market and connect our clients to those.
Right. Tony, how do you, a lot of the small companies feel that they don't have a level playing field and they find it difficult to navigate complex foreign regulations and trade barriers, and especially in a world where increasingly there are walls going up in the trade space. How does the U.S. Commercial Services step in and help these smaller companies that have a regional approach go global or work through those complexities?
So that often happens more than you would think, because the international market is not transparent like the United States market, where there's regulatory requirements that are publicly announced and available. So that's not the case in international markets, and usually the exporter will hear from their broker or their buyer about some particular foreign regulation that they haven't ever heard about. So what we do is we verify that through our market research, through our connections in Washington or our colleagues in Washington, as well as our colleagues in the overseas post, to verify whether those regulations actually exist. And we provide the U.S. company with whatever is legal and whatever is public knowledge. If we find that it's a non-tariff barrier of some kind where the government is somehow providing or imposing some overly burdensome restriction that is causing U.S. exports to not get into the market, then we contact our office in Washington. It's called Trade Agreements and Negotiations Office, and what they do is they'll investigate whether initially there's a trade agreement in existence to determine if there is some leverage to be used with that trade agreement to make that country or that country government comply. Also, we can elevate the trade issue or the complaint, if you will, and we can bring it to the level of the USTR and the Secretary's office to then communicate to our counterparts in those foreign countries to get those restrictions lifted, and to not only to lift it for that company, but for all companies in that particular industry. So we do a lot of market access work with Washington and our overseas offices to do just that. But it does happen quite often, and a lot of times it's just because the exporter is not aware of where to find the information of a regulatory requirement to get into a market. We also have many workshops on U.S. regulations and foreign regulations to help companies comply with, whether it's helping them comply with export licensing or export controls, ITAR requirements, or if it's helping them to understand what the foreign regulations are in for example, the European market. So we do a lot of education to help companies to fully understand what the regulatory requirements are to get into international markets.
So, Tony, in your experience, I mean, that's a lot of interesting information you've shared with us, but in your experience in the last, 5 to 6 years, has the international countries and governments, has it become more tougher for your partners in government to kind of get that kind of cooperation, especially as we see the trade landscape shifting towards going more local in a lot of places, or has it been the same?
It changes. It changes with each administration of a foreign government. They'll utilize trade policy as a way either to generate revenue or to restrict U.S. exports. So it's constantly changing, and we always have to be on top of what the current regulations are and who in the administration of a foreign government that we can talk to help us to understand what the right regulations are, what are the entry requirements for U.S. exports. So I wouldn't say that it's changed. It's always been tough. I was hoping that the better we get at our jobs, the easier it is for exporters. But unfortunately, it's not the case. It's an ongoing challenge. Non-tariff barriers, whatever restrictions that foreign governments will place, it's just a constant battle for U.S. exporters. But we're on top of it, and we have a lot of partners that help us. We work with local state governments, as Amy mentioned, with World Trade Centers, with small business development centers, and so we all work together to try to help companies to get a clear picture of what are market entry requirements and who to go to whenever they run into a barrier.
Oh, thank you for that.
Mustafa, if I could just add to that, the programs that U.S. Commercial Service offers around export compliance are just so valuable to the customers, right? So as a bank, and I'm sure we've all been there, you have a challenging compliance transaction that you're now doing a bit of battle with your BSA team with, yeah. Right? And as a bank, you cannot be perceived as coaching the customer to do a certain extra due diligence, et cetera. But just sort of directing them towards like some of the BIS educational pieces and really understanding end user verification for exports, et cetera, is so valuable for the client base because it sort of takes the heat off of the bank. Like the government's providing this training, all of these resources to you, please leverage that, and then we can hopefully mitigate some of the challenges that happen within the bank around those financial transactions.
No, that's a very interesting point because it's on the commercial side, we see that the U.S. government is very helpful and there's like a lot of proactiveness, but there's also the other side to it, the compliance bit you mentioned, where there's obviously ensuring that we don't tip off clients and we work closely with them. So these interesting partnerships are always very fascinating. Rob, from your perspective, as being a US-based firm, how do you go about locating and connecting with distributors, importers, or service providers in overseas markets? What are the biggest challenges you face? And I know yours is a more service-based industry, so it would be interesting to hear your perspective.
Yeah, we're a little bit unique because we're not selling widgets. We're not out doing that. We're selling architecture, engineering, design services, and construction projects. But it all comes down to when you have an opportunity that you have to see you have to look at the opportunity, the risk. Financially doesn't make sense. And really the key to it is research and resources. You have to be able to answer questions. I mean, we get an opportunity, we look at it, we put together a risk register. What are the risks that we have to mitigate to make this job a go? And if we can mitigate them and we can do the research, have the resources to mitigate them, we can make a go decision on it. If we can't, it's a no-go. So that's really it, is looking at the project, laying out all the risk and doing some research, and each one's unique in our business.
So I guess that requires you to bid for a lot of international projects, as you mentioned as well. So I'm sure there are, that's a great example of how you would work with a regional bank, and a regional bank would work with a global bank because you require those bid bonds and payment bonds, right?
Right, yeah. So you get in situations where we have a construction project, there might be a bond that we have to do. Yeah. The letter of credit becomes necessary. The banks have to work with each other. We've had situations where the U.S. bank had the letter of credit issued to the national Mexican bank for our bond in Mexico. So, I mean, the services are there. It's just knowing that you can get the services, connect the dots, and doing the research and having the resources of the government and the banks to assist you.
While this would not be a typical case of products being exported, but Tony, would you like to shed some light on how the XM credit insurance program works in situations where you are supporting U.S. exports?
Sure. So the import banks, the main services they have are the export working capital to help companies to fund an export transaction that they don't currently have the funds to do so. So they just need the purchase order. They have export credit guarantees to allow a company to be able to offer credit to their buyers, and they have the export insurance, which helps companies to mitigate risk. So if they insure their export receivables, then they can export and not worry about if their buyer doesn't pay, then the bank, they can go to XM Bank to get retrieve those funds. Obviously, they want to maintain that relationship with their buyer, but they use that as a way to mitigate risk and to go into some markets that may be non-traditional and not as stable as the bank would seem. So it's a way to help make an international sale safer than a domestic sale, and to give the U.S. company confidence to enter multiple markets where they normally would worry about getting paid.
Could we have the third slide, please? So I guess for a firm like an SME firm or a local corporate, the idea would be to be local and grow global. Mm-hmm. And so how do you retain that individuality while reaching out, in the global scope?
Well, I mean, it is our expertise. We really followed a strategy to go global. We follow our customers, right? So we have some great customers. We have large Department of Defense customers. We have Fortune 500 entertainment customers. So their projects go global. We can follow them global. We still have to mitigate our risk because we're hiring local people. We still have contractual laws. What's our recourse when we get into a contract? But we at least mitigate the risk of the customer by following our good customers that are domestic, they're bringing us international. And by doing that, we get their resources and their research too to help us along the way. So.
Right. So is there a perception within SMEs that regional banks don't have the same level of expertise that global banks have, or?
Perception, yes. I think there's 100% there's a perception. It could be around technology might not be as up to date compared to the globals. The fraud protection, it could be the FX desk, might be worried about. But as far as that's perception, I think. Right. In reality, I've been able to find, we're 90% domestic, but when we are international, we're doing an international job. When I need the FX desk, I need it. And I've been able to find the regional banks that perform, the various service, front forward, and been able to get everything I need done through the regional banks.
So the perception and reality are very different in this case, I guess.
I think so.
Yeah. And how did you, or what is your sense of the banking crisis in 2023? Did it raise any concerns from a client's perspective? How did you navigate that particular scenario?
It definitely raised some concerns. I mean, I lived through it in the 2008 period. We banked with a regional bank that went under overnight, and I didn't know what would happen the next day. Luckily, a national bank bailed it out, and we didn't lose anything there. But that could have been very harmful for the company I worked at that point. So to see it again, to raise its head, I talk amongst peers. How do you mitigate that risk? How do you do it? We like the service, we like the personal touch, but how do we mitigate it? The general thought that we get, well, one way to mitigate it is to go with a global bank, somebody that's too big to fail. The government won't let that bank fail. That doesn't help my question because I prefer to work with the regional bank. So I think it says right on our financial statement, there's a footnote that says we have concentration risk, we have uninsured balances, but the company works with financially stable banks to mitigate this. And I think that's all you can do is stay in touch with your bank. It needs to be a discussion. You need to do your due diligence if there's anything, and need to have an action plan if you need to. But I think that is a real concern, but hopefully the banking industry is addressing it too and remaining strong.
So I think what you raise are good points, and I think the mitigant for this is just very good communication along, because there's a value chain here of a global bank, a regional bank, and you as the underlying client and the government as well. And I think as long as the doors of communication are open and there's an open conversation on risk mitigation and how we can work to somehow at least address or control or be visible or see those risks and then find solutions around it, I think that leads for a healthy ecosystem. And I think these conversations are best had when there is not a crisis. Mm-hmm. Because when there's a crisis, you are already talking. You're calling your regional bank. The global banks are calling the regional bank as well. But I think these conversations are best had before actually a crisis, so that when actually there's a situation, there's more cohesion and collaboration to get through some of these difficult situations. So there's a Q&A now. So, Tony, there's one question for you. Is there an issue that the US trade policy in the last few years, some may perceive it as not being too coherent? Do you see that as a challenge from a government's perspective in supporting SMEs?
There is an issue, but it's affecting imports. It's the tariff issue that is imposed on China imports. It's probably beyond the discussion here, but that what happens is we'll get companies that will come to us with complaints about those tariffs, how it's affecting their businesses, and other Chinese importers are circumventing some of those tariffs by going through Vietnam or India. And so what we do is we connect them with our headquarters people in enforcement and analysis, which is previously import administration, and they will look at that situation and see what they can do to ensure that there is no circumvention, and to try to help the company to get its questions answered, or maybe to get an export or an exclusion of those particular tariffs. I would say that would be probably the number one issue with U.S. companies that are trying to trade. But with trade finance, I mean, there's been a lot more. I think the EXIM Bank has been having a lot of policies that have been more amenable to small and medium-sized companies for China, for domestic financing, for underrepresented communities. And for us, it's been great because we feel that export finance and export promotion go hand in hand. We're trying to help companies gain a bigger appetite for global markets, and EXIM Bank and SBA is providing the confidence and the policies to mitigate risk. And so we work together to educate the business community to let them know that they have support from the U.S. government. There's challenges, but there's also new policies that are happening that we're leveraging to try to increase U.S. trade as best as we can.
Amy, the next one is for you. SMEs are particularly vulnerable to economic downturns and geopolitical events that can impact business demand and business operations. Do you actually, and I guess you're speaking for the whole sector here, do banks really have appetite for this sector at this moment?
Well, I think speaking for my own bank, we certainly have appetite for the SME sector because that's really our core client base. So we're a very conservative bank, so we really take a lot of time to do due diligence from a credit perspective. We want to see our customers being well diversified in terms of their client base. We want to put a lot of the credit supports in place for them. So we figure out how to do it. There are instances, excuse me, where we can't, but we do our best to support when we can, and we want to see that sector be very successful because that is such a core part of the U.S. economy.
Yes, it is 43% of the economy, so I guess in a way it's too big to fail.
That's right.
Hope so.
Tony, how do you compare U.S. government finance programs to maybe finance programs in other countries that help and support the SME sector's growth? Is there something that you guys measure against?
So this is from EXIM Bank that have told me that U.S. companies use trade finance somewhere in the 20% range, whereas our counterparts in the developed countries like Germany, Canada, Australia use it over 50%. So there is already a competitive disadvantage for U.S. companies because they're not using trade finance, the U.S. government trade finance through EXIM and SBA. But other countries, I think somewhere around 50 to 60 other countries, they have their EXIM Bank equivalents, and they are helping their SMEs more than the U.S. government is helping SMEs. And another percentage that helps to demonstrate that is our GDP in terms of exports is only 11%, and in some of our counterparts like Germany, it's over 40%. In China, it's over 20%. So So other countries, some of our main trading partners are exporting more than we are in terms of their whole GDP. But in terms of volume, we're the #2 exporter. China is the #1 exporter. But the leadership that we have is not by chance, it's deliberate. I mean, International Trade Administration is constantly promoting exports and trying to work with our trading partners to make it easier for U.S. companies to get into foreign markets. So hopefully that, in a roundabout way, helps to answer the question.
No, it does. And thank you for your time. Thank you, Amy. Thank you, Rob. Thank you, Tony.
Thanks, Mustafa. Thanks, Tony.